Hey guys, welcome to the channel. We are talking about GameStop yet again. We've got a lot to cover in this video, like the annual shareholder meeting that got pushed back, what the CEO Ryan Cohen actually said, why I think it might be a really good thing going on right now, and why it might also be bad. We're also going to talk about the cash situation, Roaring Kitty and what's going on there, expectations, a lot of other things to talk about as well, and most importantly, stick around for the last part because I'm going to explain to you guys what I think he's actually planning on doing and why it might be the ultimate play for GameStop. Hey guys, Corey here. Welcome to the channel. If it's your first time stopping in, be sure to subscribe, tap the bell so you know when I post new videos. And if you could give me a thumbs up, it's greatly appreciated. However, before we get into today's video, if you guys are looking to become more profitable in the market and you like the strategies that I employ in this video and my other videos and you like my teaching style, you guys can sign up for my Discord and one-on-one coaching at any time. And what drives me every day is coaching other people into success and helping them live a better life. You guys can do so at investwithcorey.com/learn right there on the screen or in the information box below. Limited spots remain. I hope to see you over there. Let's dive right into today's video. So I've talked about GameStop in the last two videos. We're not going to really rehash all of that information completely out. We're going to talk about the annual meeting which took place today. A lot of people were disappointed, I guess, because they thought Roaring Kitty was going to be elected onto the board in some sort of capacity, in some executive role of some sort, I guess, and that didn't happen. And not only that, Ryan Cohen said a lot without saying anything. He pretty much said they don't really want to disclose any plans for the future, and what they're really looking at is just focusing on profitability. And I quote, "We continue to plan on reducing costs and focusing on profitability. Also reducing the number of physical stores. We're not here to hype things up or make promises. We are here to work now." What these basic quotes are telling me is that they have a plan for GameStop, which might actually be good. And maybe it's a disappointment to what you guys were expecting. And Roaring Kitty's diehard fan base were really expecting things to play out in his favor and maybe him be elected onto the board in some executive role, like I said, but things didn't quite pan out in that direction. What I think is actually going on here, now this is my opinion, but based on my experience in retail, my brother used to work for GameStop as well as Electronics Boutique, and my sister was also working in high school at Babbage's back in the day, about 13 years ago. So my family does have a little bit of experience in the gaming retail, not to mention I'm an avid gamer and played a lot of video games in the 90s and early 2000s myself, went to Funkoland, Babbage's EB Games, and Electronics Boutique, and as well as GameStop. So I have a really good fundamental understanding of this market. And what's really hurting GameStop is their lack of digital offerings, and they're kind of stuck in 2008, which is what's really hurting them. And I think that Ryan Cohen's direction is he's trying to figure out a way to raise cash so he can continue to make GameStop profitable, and he wants to keep it running as GameStop, not as maybe a SPAC, a specialty acquisition company. I don't think he wants to do that. It looks like maybe that's the game plan, but it's also now looking like he also wants GameStop to continue doing what they're doing, but find a more profitable way to do it. In my honest opinion, the best way for Ryan Cohen to do this for GameStop is quite simple. GameStop sells hardware. You can't buy a PlayStation 5 or an Xbox Series X digitally. You have to physically buy the console. People must go into the store to buy the console. They need to price their consoles better than anywhere else so people don't go to Walmart, they don't go to Target, they don't buy it from Amazon, they will go to GameStop to buy it, like throwing in games at a discount, coupon codes, different things, figurines, different collectibles, posters even, things to make people want to buy the consoles there. Also, people that opt to buy their digital games from GameStop with a gift card or a digital gift card at GameStop or physical games at GameStop in the store, they could be offering a discount so that instead of buying a game online for say $99, you can get it at GameStop for $89, or you can get it for $99, but you get a free poster or you get something else that they throw in. They got to incentivize people to get off their butts, get off the couch, get out of their chair, their gaming setup, whatever, and get into a store and spend money. And I think Ryan Cohen is headed in this direction. I think this is where he wants GameStop to go. He wants to close unprofitable stores and expand the ones that are profitable or that are likely to be profitable and continue to run his business model of selling trade-ins, games, consoles, stuff like that. But they have to work it out where there's an incentivized program going on to make people want to go into their store and spend money instead of buying digital games. This is something that a lot of YouTubers aren't talking about because they're not thinking about the retail side. They're thinking about stocks and they're thinking about SPACs and holding companies and this and that, but they're not thinking about what GameStop is and why GameStop is failing. GameStop ultimately right now is failing for the same reasons Blockbuster failed. Failure to adapt or failure of adaptability. Another reason why Funkoland went bankrupt and another reason why EB Games got bought out by GameStop. All of these things trickle downhill. If we expect GameStop to be popular in the future so that our kids have a gaming store to actually go to buy video games, GameStop needs to focus really really on one thing and one thing only, and that is selling video games and doing it in such a way that they are incentivizing people to buy video games at their video game store. This seems to be the thing that they're not focused on. They're ultimately not. Now it seems like Ryan Cohen is actually focused in that direction. So Ryan Cohen has used the share offering to generate $3 billion, not to mention the other billion that they have in assets. They're now sitting on $4.4 billion in cash with a price to cash ratio of 3, which is the best out of all 100 companies in the NASDAQ 100. So really what it comes down to is, can GameStop continue this momentum going forward with Roaring Kitty and everything going on with the stock market right now? And can they start to become profitable? Can they incentivize people to buy games at their store? And what are they going to do to change their business model going forward? And like I said, offering digital games at a discount, physical games and trade-ins at a discount. And when you buy consoles, you get posters, you get discounts on games. They've got to come up with a way to incentivize rewards to make people want to go into the store or go to GameStop.com. It's the last bastion of game stores. Best Buy sucks. Amazon sucks. This is it. FuncoLand's gone. Babbage is gone. Electronics Boutique, EB Games, all gone. This is the last bastion. So let's dive right into the options chain. Let me show you guys the charts and how I actually gauge whether or not I'm getting into a trade or not and how to do it. If you guys enjoy the strategies that you see in this video and my other videos, and you're looking to become more profitable and you want to do better in the market and maybe you want one-on-one coaching, you guys can join my Discord and my training course and have me as your one-on-one coach. Limited spots remain. You can sign up right there on the screen, investwithcorey.com/learn, or in the information box below. Let's get into the options chain. Okay, guys, what I typically do when I'm looking at a stock with Bollinger Bands is I set it to 20 length SMA, 3 deviation, which is 99% accurate, meaning on the daily chart, it's unlikely that GameStop would go below $8.29 in the next week or two, which is very low. When we go to the 4-hour chart, this is the intraday chart. So in the next day or two or a couple of days, it's highly unlikely GameStop would go below $21. It's hard to gauge a stock like this, so I'm going to go to daily, and I'm going to go to Bollinger Band standard deviation of 2, which is 96%. $14 is the Bollinger Band's floor. However, it's hard to say because of the 100-day moving average and us being finally above it. I would say really $19 is the floor. Be careful, but I'm going to show you guys some trades that we can get into to make juicy premium and show you guys the safe trades. GameStop did not drop a lot today, $3.48. All things considered, it wasn't that big of a drop. I've seen Upstart and Affirm drop $8, $9 in a day and a half, and they're not even anywhere near as meme-like or volatile as GameStop. So really today wasn't that bad, and I think expectations killed it, but let's jump into the options chain. Let me show you guys exactly what I think. Okay, guys, I would sell a $20 or a $21 put. This will collect you guys actually a little more than this because the price went down after hours. So a $21 put's gonna be more like 20 bucks, and a $20 put's gonna be more like $15. It's a way to collect some extra juicy premium on GameStop. You can see the manipulation in the options chain right here because yesterday a $40 call would have been $200. Now it's $40. So there's a lot of manipulation still going on in the stock. Click on sell, click on put. Right now, I would do a $21 put for $14 or 22 for 26, which is 84% chance of profitability. You can see how the chance of profit's 84%, whereas yesterday and the day before, $22 would have been like 60%. So there's a lot going on with the stock, but I would say that $22 or $21 puts will get you some juicy premium. I showed you guys on the chart that it's unlikely that it would go below 20, so 21 is safer. This will net you $14 juicy premium by the end of the week. GameStop would have to drop $3 more by Friday, and considering Wednesday's closed, it would have to do this in 3 days, which is possible, but highly unlikely. You will collect $14 juicy premium. Your break even will be $20.86, which means you're getting into the stock a lot cheaper than now. Even if it did drop, the likelihood of it dropping even further below that would be highly unlikely, and you would be in at a much better price and ready to ride the wave and make more profits. Plus, cash secured puts are a lot safer. Personally, I would sell a $22 put because it's more juicy premium, 84% chance of success, and a 14 delta, which is very low volatility at this point, and I would say this would be the one that I would sell. Collect $26 juicy premium, giving you a break even of $21.74. Once you're into the stock, you can go ahead and start selling covered calls. If we go out the 21st or the 28th, you can also see that you would make on a $28 call, you'd make $205 going out to next week. $30, you'd make $175. I would sell the 30 because you're collecting $175, but if the stock goes up, you're also making another $500 on the shares. The same thing with the puts. If you go out to next week, you could sell a $21 put for $50 or a $20 put for $30. I would still sell the 21 to make 50 or the 22 to make 90. The 22 is actually better. It gives you a break-even price. 21, if the stock stays above 22, you get to collect $90 juicy premium. 74% by next week. Delta of 23 is not too aggressive for a cash secured put. Then you can just start selling covered calls. If we're going to go out 2 weeks or close to 2 weeks, you can sell $30 covered calls for $175. We could even go as high as $35 and sell one for $120. This would net you a $1,120 profit, $1,000 for the shares and $120 for the covered call. There's a lot of ways to make money on GameStop, but right now, ultimately, the best way to do so is to get in close to the bottom or where the price isn't going to drop much further and just start hammering out covered calls and buying long calls at a bottom so that when the stock price goes up, you can exercise these call options and get more shares. Then you could sell more covered calls. Because realistically, if you got in at $25 and you got 1,000 shares, you have 10 contracts, you could sell 10 $35 contracts, which should bring in $1,200 a week or every 2 weeks. That's $2,500 a month on 1,000 shares, which would be about 20 grand. But then you're also collecting the profit if the stock moves. If the stock goes up to 35, you're making 1,000 on every 100 shares plus the 120. So you're making 1,200 plus 10 times 1,000, which is $10,000. So you could realistically make $12,500 on $20,000 for like a 30 to 40% return in 3 weeks to a month if you play your cards right. But you have to get into the stock near a bottom. We've done this already and realized that the bottom is somewhere right around here, $19 to $20. Let's watch and see what happens with GameStop tomorrow through Wednesday, going into the reopen of the market on Thursday and getting into the stock to sell covered calls for the following Friday. I really believe this is going to be a long play. Ryan Cohen's not going to let this fail. They have a plan, but I think they're really focused right now on GameStop becoming a successful game store, and hopefully they have the right plan to adapt the store to the current market conditions that we currently are sitting at, which is obviously digital games and digital downloads and whatnot. They got to incentivize, like I said, that they can do that, and if they can start becoming more profitable, let's say the next earnings report, they can break even at 0 instead of -9, or just get closer to becoming profitable. Eventually, GameStop could see profits, and if they see profits, they could see natural exponential growth because of all the support they currently have. You mix that with legitimate profits and the cash that they're sitting at, GameStop could be a force to be reckoned with. If Ryan Cohen takes GameStop down the path it looks like he's taking them, and they can do it right, become profitable, and start taking GameStop where they need to be, and they can show profits and show sales and growth with the cash they have on hand, as well as all the support with Roaring Kitty, and overall just the support in the market for diehard GameStop fans, this will be exponential growth for GameStop, and in the next year or two, we could be at a much higher stock price than we are now, and it could turn out to be one of the greatest companies of all time, especially if they also invest in other independent game studios, or they become a holdings company, or they just overall invest elsewhere and the growth of GameStop, and they do it the right way. Thanks so much, guys, for being here. Really appreciate you. Be sure to subscribe and tap the bell. Give me a thumbs up. And if you guys enjoy the strategies that I implement in my portfolio and in these videos, and you want to learn more and surround yourself with like-minded people, you can join my Discord and one-on-one coaching and training course at any time at investwithcorey.com/learn right there on the screen or in the information box below. Limited spots remain, though, and I take great pride in teaching you guys, as it's my daily goal to help others, and I can't wait to meet you. So hopefully I'll meet you soon over at investwithcorey.com/learn. I got another video that you guys are going to love, and it's how to grow your portfolio much quicker and much easier than you ever thought possible. And that video is right there. I'll see you over there, guys. Thanks so much for being here. And remember, in the meantime, let's grow our wealth together. Take care, guys. Click the video. You guys are going to love it. It's excellent.